SMF Street Traders, we showed the 1175 call up and out of the money and deep in the 1175 put. Now we're going to look at the 1150 call, which is right at the current strike price. The S&P closed at 1148. This is the weekly chart. Once again, another recap is that we've got to close above that half bar here. If we do, we go higher up into that 1175 area. That's the weekly chart. You already know what this is about. SMF, MMTs, you already know that you have to clear that in order for the call side to keep running. But most importantly, outside of that, let's take a look at the difference between, this is the 1150 call chart, which is right here before your wonderful eyes. And once again, SMF is a market maker platform in the options market, just as we do in the equity market. They both work well together. So basically, when we were deflated, that call contract was right up here in August 9th. These were $27 on the high, for crying out loud. When we had the August short that we shorted down the market, go to stockmarketfunding.com and find all the videos when we were short in August. August was the worst month in 10 years. We got down to the bottom of this deflated price at 230 of the 1150. That was totally deflated in price. And at the very same time, back then, I'm going to show you where the 1150 put was and exactly where it was, which is right here. And at that time, this weekly chart for October contracts, these are the October, but it doesn't matter. Let's clock the high over here. The high was $105 on the 1150 put. Well, now they're clear down here at $20. And I had live bids out on Friday that if I break up through resistance, I know that this contract will come down. And what kind of a trade is the SMF Street Traders looking at is that, look, when you were deflated, no one thought you would go higher. Well, you weren't going to go much higher. They took all the premium out of the contracts here, man. All of it, all the way down. And they really took the 1150 put out to the cleaners off of $100 and some. So you got well over $80 that had dropped. Eventually, I'm going to get net wholesale. Eventually, when it's ready, what I'm going to be doing is taking a look at how much more that the 1150 call, which we already own this call, by the way. The time to buy them is when they're deflated like that. And the time to buy this is when it gets that way. There will be a change. When we hit the extreme, there's still more room to go. I'm going to buy this side of the trade when I go down and I make the highs. If I can't close above 1150, I'm not making it to 1175 or 1160 on the S&P. It's that simple. It is that simple. That means that the put would go higher. That means that the call side that ran from here to there would drop in value if that's the case. However, we're not cashing out the long side of the 1150 call, but rather let the winner keep running, and we're going to start buying this down here. And I'm going to conclude the videotape. What I'm going to do is say, once again, the master of market makers in the option pit is to sell the inflated, buy the deflated, sell the inflated over here, sell the inflated over here, but rather knowing when to buy deflated here, and this is going to come down. And we'll be looking at, we're not cashing that one in. We're going to look at how to buy this one wholesale and see how much we can keep letting that run. So that way we can be, we're already 1150 call long, but now we get to buy the same thing against to protect the gains. We're going to buy this one wholesale. So we're going to see if this one will gap down to around, all our bids were out at 1570 on Friday. They're on the live website. So I'm going to give out the prices right now and conclude the 1150 call and 1150 put trade management, SMF trade risk management strategy. Let the winner run, protect it down here at the wholesale price, just as we bought over there. Buy that in there, and you've been given a gift.